Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. I am Ryan Nauman, the market strategist here at Zephyr. You know, over the past few years, holistic financial planning has really grown in demand and popularity, and also really in importance. One part of holistic planning is insurance, like life insurance. Well, I have on the perfect guest, not to just talk about the death benefits and leaving a legacy, but the other benefits of insurance solutions. But first, today's episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions. So let's go ahead and get started. I would like to welcome Howard Sharfman. Howard is the Senior Managing Partner at NFP Insurance Solutions. Howard, thank you so much for coming on the show. It's an honor to have you on. I'm really excited about this conversation. Don't talk about insurance a whole lot on the show, so it's going to be a good one. Can you please tell us a little bit more about yourself and NFP Insurance Solutions?
Absolutely. And thank you so much for having me on your show. It's really an honor and a privilege. For me, I'm an insurance geek. I started in this business in 1987, and I've worked very hard to build a reputation as an expert in the financial security world or the insurance world. I run an agency, NFP Insurance Solutions, and we provide financial security solutions to high net worth and ultra high net worth clients. We also work with emerging high net worth clients, but they all typically have pretty complex needs. And it's such an honor and a privilege to help all of these clients and their families.
Fantastic. Yes. Like I said, it's very important. And years ago, when everybody was talking more about just performance and investments and stuff like financial planning, it was more of a niche place, I think. Now it's becoming so much more important, and financial advisors now are offering a holistic plan. Well, to me, I'm an investment guy, obviously, so investments has got to be a primary piece there, but insurance should be one of those conversations, and they should play a very important role in financial planning. Why do you believe insurance should be part of the conversation financial advisors have with their clients? And do you think they are having those conversations?
Sure, that is a great and pertinent question at this time with your audience. So I speak around the country and I often talk about this issue. There are two types, in my mind, there are two types of investment advisors. There are one that's job is to make $1 into $2 as quickly as possible with as little risk as possible. And some of them are hedge fund managers, some of them are institutional money managers. And if they're not talking about insurance and if they're not talking about insurance solutions, I absolutely understand it because their clients hire them to make $1 into $2 as quickly as possible with as little risk as possible. But for everyone else who is marketing themselves as a wealth advisor, as a family office advisor, as a multifamily office advisor, they need to be talking about insurance literally on a daily basis because it's part of a financial plan.
Mm-hmm.
And if they're not, there's some red flags that should be flying. Because if an advisor who is truly a wealth advisor or a wealth strategist isn't talking about life insurance needs for people who are working and need that income to support their family and are spending that in income replacement wise, or they're not talking about disability insurance for people in those same situations or long-term care coverage for people who are concerned about using up a lifetime's worth of savings in a long-term care incident, we're really not being true to our title as wealth strategist or wealth manager. Now, if your job is just to make $1 into $2 as quickly as possible, I'm okay with that.
Yep.
But if you're working with the client in their wealth management, you need to either have your own insurance solutions that you provide, or you need to partner with people like us who provide insurance solutions to people in the independent RIA space, in the wirehouse space, in the banking space. And that's where we work as an advisor on an advisor team.
Fantastic. Yeah, and I'm glad you brought up the other pieces of insurance. We often talk about life insurance, but there's a lot of other things that can help protect families in case of disability or loss. So there's a lot of things to talk about. And like you say, financial advisors, they may be focused more on the investment side. They might not have a lot of experience on the life insurance side. So it's good to be that center of influence, but also partner with other people like yourself who is a subject matter expert there. You know, what, taxation of life, and we talk a lot about taxes, taxes of investments and just income taxes. Taxation of life insurance is a key component of life insurance, especially the death benefits. But are there some misconceptions, maybe a life insurance taxation?
There is. And let's start with what life insurance is and what life insurance isn't.
Okay.
And I want to make a bold statement here, which is life insurance is taxed correctly. I've spent a lot of time lobbying in Washington, speaking to congressmen and senators, talking to staffers about life insurance taxation. Life insurance is taxed correctly, so let's just compare it to investing in Berkshire Hathaway. If one invests in Berkshire Hathaway, we're making an investment. Hopefully, that investment grows
Mhm.
in value as it has in the past. As it's growing in value, you're not paying tax on it. It doesn't pay a dividend, so you're not paying current tax on it. You could have that asset placed at your custodian and take a pledged account line of credit to take money out of that asset without selling it and without realizing tax. And then when one passes away, when one dies, you get what's called a stepped up basis, so you never pay income tax on that. If you break up the transaction and you sell the stock, you pay long-term capital gains if you've held it long enough. So that everyone thinks is taxed correctly. Life insurance, when you put life money in a life insurance policy that we call a premium, it creates a cash value, and that cash value grows on a tax deferred basis, just like that Berkshire stock.
Yep.
As it grows, we have a basis and we can withdraw to that basis without any tax. And then if we want more money than that, if you put in $1 million and it's worth three and you want $2 million from your account back, you withdraw a million and then you borrow a million
Okay.
from the insurance company at pretty much the same rate you're earning. So you could take the money out during your lifetime, just like what I described in Berkshire. And when you die, you get income tax free death benefit. That's in the statute. Oh, but if you break up that transaction, you then pay ordinary income taxes, which in today's world is higher than capital gains taxes. So it's actually taxed unfavorably in compared to an investment.
Okay.
So there's no reason to think that life insurance is not taxed correctly. And it was so much so that this used to be in a list of tax raisers, that if they taxed life insurance cash value, it would raise money. That was determined to be wrong, and it was taken off that list. So it's no longer on the list of tax raisers, like the deduction for health insurance, like the deduction for mortgage interest and things like that. So we think life insurance is taxed correctly, and it's good public policy. There are lots of different life insurance types of policies, one of which has been in the news lately called private placement life insurance.
Okay.
And that is still just a life insurance policy. It's a life insurance policy that's only sold to accredited investors. It's a life insurance policy that has the option, instead of having the insurance company to manage your money, or you choosing from a list of mutual funds, to invest in alternative assets like hedge funds, direct lending, private equity. But it's still a life insurance policy, and it still provides valuable death benefit that families need both personally and in business.
Hmm.
So life insurance taxation is kind of like a Roth IRA
Okay.
taxation without some of the limits that a Roth IRA has on the positive side. On the negative side, there is a cost because they're providing life insurance. There's an acquisition cost. And the question is that a good trade to trade taxation with the cost of the life insurance structure?
Hmm. Hmm. Fantastic. How do you feel about the private placement having alternatives in there? What's your thoughts there? It seems very interesting, alternatives, whether it's private credit, private equity,
Sure.
becoming very popular in the investment state. Is that a good innovation, do you think, within life insurance?
Well, a private placement life insurance policy I've owned since the year 2008. It was 2008 before the crash, not 2008 after the crash. I wasn't that good on it, but I'm a big believer in it. And here's why. One, the structure of a private placement life insurance policy is the same as a life insurance policy. I have death benefit that will be
Yep.
provided to my family, and I just get to choose the investments, the underlying investment managers. So if I chose a hedge fund like Millennium or direct lending, those are assets that I wouldn't want to hold personally in my revocable trust because the taxation of ordinary income on the gain.
Mhm.
So 10%, a 10% return is pretty exciting in private credit.
Yeah.
But if you're sitting in California or Nevada, I'm not sure which side you're on, but in California, and you're paying federal and state tax on 10%, it's not so exciting.
Right.
So if that could be the underlying investment in a life insurance policy, and we could allocate to a fund that specializes in that, and we then avoid the current taxation of that in exchange for the cost of the structure, and we provide the valuable life insurance protection, it's really interesting. It's a great conversation. And if you have ultra high net worth clients, accredited investors who are willing to put in $1 million into a structure like this or more, it's worth a conversation. And I guarantee it will be an interesting conversation, and someone will say, boy, that makes sense. It might not make sense for me right now.
Right.
It might not be insurable, whatever the issues the clients have, but it's an interesting conversation, and I think a valuable one.
Yeah, that's a very good point. I was really unfamiliar with them until you just brought it up, and it is interesting. And like you said, it's a good way of getting exposure to something that's uncorrelated, yet that tax deferred growth is very appealing in that space. So we talk about, the benefits of life insurance. And the holistic plan or financial plan and how it fits. And obviously, there's the death benefits and the tax deferred growth and so on. What are some other benefits to life insurance when you're thinking of the entire financial plan and maybe investments and maybe how they work together? Um, are there any other benefits that maybe investor or financial advisors don't think about when they're discussions with their clients?
I'd like all the financial advisors to think about this conversation that can go one of two ways. A client passes away, a client who's maybe in their 50s, maybe in their 40s, maybe in their 60s, they're working, they have a family, they have a mortgage, and they pass away either due to sickness or to injury or accident. Doesn't matter.
Mhm.
And you have to have a conversation with the family. And the conversation will either go, I'm so sorry, words cannot help,
Mhm.
and money cannot help.
Yeah.
However, your father, your mother, your husband, your wife prepared for this and loved you enough to talk about insurance and decide to allocate funds to purchase a life insurance policy. And although we're in the midst of all of this grieving, we'll have some time to grieve because ABC Insurance Company will be delivering a check for X number of millions of dollars.
Mm-hmm.
That is a conversation that you pray you never have, but if someone does pass away, you pray that you do have. The
Mm-hmm.
other conversation is our investment accounts have X. We could take out 4.5% a year from that based on our models. And now, although their income was $400,000 a year, your $3 million a year, a $3 million investment account could generate $11,000 a month, whatever the numbers
Yep.
are. One conversation means that someone was a professional and thought ahead. One conversation was their job was to build a dollar into $2 as quickly as possible with as little risk as possible.
Yep.
I would like to talk to clients the way that we help them the most. I've had the honor and privilege of paying over $1 billion in death claims on policies that I've placed personally. So I knew all of these people. Some of them made rich people richer.
Mm-hmm.
Some of them were done for estate planning, and maybe we did other things to help mitigate the estate tax. It was just more money.
Yep.
That's good. But where it really helps is when you could keep someone in a house, when people could continue to go to college, when businesses could continue to thrive, when we have time to grieve. Because of what I did, it makes me very proud to be in this incredibly noble profession of financial security professional that I'm in.
Mm-hmm. No, that's great. How does insurance and maybe the underlying investments of life insurance, how does it correlate maybe to, or when you put it together with the investment management or the portfolio, how should financial advisors look at that in terms of the potential investments or like you said, you could take out $1 million of that
Sure.
life insurance. Like, how does it work? How should a financial advisor view that compared to just maybe a non-qualified or maybe even an IRA?
Sure. There are a lot of tools in our toolbox, and there's a reason for that someone invented all of those tools. And we have to bring them out as craftsmen to our clients um, exactly when we need them for our clients. So, what does that mean? What it means is if a client is looking to replace an income, and we have a guaranteed insurance policy.
Mhm.
When the markets go up and down, that policy doesn't go up and down. It's guaranteed to provide a non-correlated, predictable, and guaranteed amount of money to a family. That, if you put that together with a well-balanced and well-run portfolio, creates additional return. And it creates additional return because that policy should, if designed correctly, and people live till a normal actuary age, that should create lift against a similarly situated bond portfolio of similar credits to the insurance company. So if we could increase the yield in a total estate plan and financial plan by adding life insurance, we've created more money for a family. It's become predictable, it's become non-correlated, and they don't worry as much. So their quality of life is definitely improved.
Mhm.
Ernst and Young created a paper on this, and you could Google Ernst and Young insurance white paper, and it talks about how adding life insurance and annuities to a portfolio could increase the value to the family, increase retirement income, and increase legacy planning. They're not in the insurance space. They're as
Yeah.
credible as any firm in the world. and they created this, and it's my understanding um, that they're coming out with a second and more advanced piece soon. And we look forward to that because the more people that understand this, the more clients that can be helped. And I know everyone on your podcast is listening because they're true professionals and they want to help clients.
Yeah, yeah. Fantastic. I'm really glad you brought that up because at Zephyr, we have a tool, a Monte Carlo simulation, and I'm actually this conversation is very timely because I'm looking into the impact annuities have on, making your income last, right? Making sure you have guaranteed income to last, offset that longevity risk, outliving your money, right? So we're doing some interesting things there and some research to see how annuities can help that retirement crisis, right? There is a
Right.
retirement crisis happening. People, there's research that they do not believe they have enough money to retire. Social Security is not secure. It's very uncertain going, into the 2030s. Um, People don't have access to pensions like they used to. And we often talk about, maybe create your own pension, like an annuity to help
Right.
provide you income to bridge that hurdle. Are there, do you have any other thoughts on including annuities? And you just referenced
Sure.
Ernst and Young into
Well,
that
let's start
investment
with that.
portfolio?
Might be a longer discussion. I would love to be
Yeah.
invited back to have that discussion, but I want to leave you with a couple points. One, clients like guaranteed income.
Hmm.
Today, we measure wealth by net worth. In the course of history, we've always measured wealth by income. I've never talked to anyone who had their own pension plan, a defined benefit pension plan, that didn't love their pension plan. Everyone likes getting a social security check. And we could create a second, a third, a fourth, a fifth social security check through some of the really interesting annuity structures. And the only way that could hurt a client if the market goes up so much
Yeah.
that the opportunity cost is lost. So if you balance a portfolio and you have some guaranteed annuities that were created as part of a portfolio, not all of a portfolio, but part of a portfolio, and the client still grows their assets in the markets due to market forces, it's a really good combination. The other and probably more important thing is there are massive health benefits for people who have guaranteed income. There are health and enjoyment benefits, and there's lots of research on it that people who have these guaranteed incomes
Hmm.
enjoy retirement more. How many people do we all know that have a big pot of money that they're afraid to spend because they might need it for a rainy day and they might live too long? Well, if you have an income coming in, you could, one, spend that money.
Hmm.
Two, use it for legacy and enjoy your life more. One of my first mentors, an amazing client who ran a firm called Solomon Brothers and then Lazar Fairs, told me being richer isn't better than being poorer is worse. And if we run a business with that in mind and we protect clients' income and their spending power, they have so many, the number of concerns are less and they live a nicer life. And I think that as a wealth manager, as a financial advisor, we need to have those discussions. And for many people, it makes a lot of sense. It's one of the tools in our toolkit, and we need to pull it out at the right time and not the wrong time.
Yeah, that's fantastic. I mean, Howard, who doesn't enjoy receiving a check while you're sitting on the beach having a pina colada and just know that there's a check in your I don't even they probably don't even send checks anymore. A direct
I
deposit
assume it's a direct deposit, right?
direct deposit into your bank account so you can buy yourself another pina colada and you don't have to worry about it. Um, let's say you talking a lot about financial advisors in this conversation that financial advisors and the importance of it should be having with their clients. Can you please maybe provide some best practices for financial advisors who have clients looking to buy insurance products?
Sure. So, one, you need to either be skilled in financial security consultation and products, so the insurance products, or you need to have a partner that does that. Either way works. I don't manage my own money, and I have partners that do that.
Hmm.
I believe people like me should not be the most trusted advisor, but should be an advisor and an advisor team. And I
Okay.
see a lot of estates, I listen to a lot of conversations. I am a subject matter expert. And if you're a subject matter expert on this, great. Make sure you have the discussion. Make sure in your checklist of things to do on your annual review that you talk about where they are, one with their retirement planning, where they are with their investments, where you are with your life insurance, disability, long-term care. You talk about what their parents have done to plan. Because I have lots of clients whose parents believe they have long-term care insurance. It's called their children. And the question is, do the children want to step in the role of that insurance company, or do they want to reinsure that to another insurance company? And that's a reasonable conversation. And so the best practices are one, to talk about it.
Yep.
Two, not be afraid to have conversations that aren't that fun.
Yep.
I know talking about death isn't that fun, but guess what? We're all adults and it's going to happen. We can't avoid it. So let's play that out. Let's make sure that our clients don't leave someone else their mess, either their financial mess, either the fact that they didn't do their estate planning and they don't have wills and trusts and things like that. Maybe they have too much stuff. Yesterday, I had a conversation with the head of an auction company who deals with collectibles and house sales and antiquities, things that are valuable for your clients. Their kids, they have a house. All their walls have paintings on it. You might love your painting, but they probably don't. So let's have a plan for it. And this is the best practices. And when we do that, not only we help our clients have more money, be protected in case there's someone dies too soon, lives too long, or gets sick, and they have a more enjoyable retirement.
Yep.
And finally, there are some really unique products in the marketplace that combine wellness with insurance because who really cares how long you live? But your family, your friends, maybe a business associate, and your life insurance company. So now some of the life insurance companies are adding a longevity component and they're giving you massive discounts if you do healthy things.
Okay.
I love the idea that my life insurance company wants to help me live longer. We are aligned in that goal. And I have an app on my phone. And it's gamification of this. I get points every day. And if I haven't walked 10,000 steps, I'm going to go walk my dog because I want my points. And that's making me healthier.
Hmm.
And we have examples, and I'm going off on a little tangent here, but we have an example that life insurance company offers a test called a Grail test. And a
Okay.
Grail test is a blood test, and that blood test tells you if you have cancer, 49 different types of cancer that were previously not diagnosed,
Oh.
not diagnosable. My partner took that test, cost $1,000. The insurance company gave it to him because he had a policy and they found cancer 6 months before any doctor could find it. They said he had cancer. He went to the hospital, took all these MRIs. He couldn't find it. They sent him home as a false positive. He didn't believe it. He went to another hospital. They said, we know the science. It's there. We can't see it. That type of solution, by the way, happy story, found it right when it came about, got rid of it. He's fine. He wouldn't have been fine. So think about the wellness aspects of what you could talk to your client about at the same time you're talking to them about protecting their family
Hmm.
and growing their wealth. That combo platter is a really exciting one.
Yep. Yep. Fantastic. Yeah, it's good to hear, the insurance companies, they are doing a lot of different innovative things out there that help their client and their customers. So great things there. Last thing, you mentioned You and your team recently conducted some research on really why high net worth individuals buy insurance products. I always love surveys and maybe interesting tidbits that people can pull out of the survey. What were some of the findings and maybe a couple of the interesting pieces of those findings you guys located?
Sure. So the first thing we did is we had a survey of our clients and we asked them how they made their money. And there were really only three categories. The clients were 75 clients responded who have over $100 million. So very significant high net worth clients. They said they made their money in one of three ways or a combination of these three ways. One was they made it the old fashioned way, they inherited it.
Yep.
And that's great. And they want to be good stewards of wealth. And that's why they've talked to us. And we love those clients. The second group of clients said they just went to work and they happened to work in a profession that made a whole bunch of money. Maybe they were a managing partner of a law firm, or maybe they were in
Yep.
private equity or hedge funds or investment banking, or they created something and they woke up and they were rich.
Hmm.
The third type was very interesting and I think was very telling. They said they had liquidity when other people didn't, and they deployed it and made a bunch of money at one or two times during their life. So, what do you need for that? One, you need liquidity, and two, you need the knowledge to invest it. If that's a third of the people, we have to make sure that if we want to help our children, we don't let all of our liquid assets be taken up by paying estate taxes, and we provide those liquid assets, I believe. So that was really interesting to me when talking about the importance of liquidity and the ability to allocate it at the right time. Now, maybe they allocated it, maybe their investment
Yep.
advisor allocated it, whatever it did, but they had the benefit of it. The other thing is, we had a client who was a hedge fund manager and wanted to know why someone like him would buy insurance. So we put together a list. And when we read this list to them, to him, which may sound simplistic, but we did specifically this. His head went up and down on the things that he liked and side to side on the things he didn't. So things like it's a non-correlated and predictable return. It guarantees a financial legacy. It's tax-deferred growth, as we spoke about. It's predictable in what it does. It's protected from creditors in most states. It covers the GPLP capital calls they have, a prudent asset allocation. There's lots of reasons that people do this. It's a private transfer of wealth. It can be transferred from business to personal and back. It can be used for charity. We have a list of this, and I'm happy to share that with you. And we'll provide a link
Yep.
that you could go on and um, obtain two things from us. One is why ultra high net worth people buy insurance. And the second is easily recognizable insurance opportunities. And we work with accountants and lawyers and financial advisors with this list to try to have them think about their client base and say, yes, who might benefit from this? What family has children that are in and outside of a business? What family has a need for insurance because they have a child with special needs? What family doesn't want K1s and maybe wants that to go to an insurance company instead? So happy to share this with all of your listeners for investing your time with us today, which I'm so honored to have been able to share with you.
Fantastic, Howard, and you're exactly correct. We will include a link to that research and information in the show notes. So find those in the description. Howard, thank you so much for coming on the show. It was a really fun conversation. I learned a lot. You dropped a ton of great insight, so thank you. Where can our audience get more information about NFP Insurance Solutions?
Sure. One, feel free to always email me, howard.sharfman@nfp.com. And you could also go to our website, nfpis.com, www.nfpis.com, and feel free to Google me. And you can find me. I'm very findable, and we hope to be of service to any of you who need help in the insurance solutions field.
Howard, thank you. Great conversation. And thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other podcasts on the Zephyr YouTube channel and on Spotify. And also, please be sure to subscribe to the channels and give us a follow on LinkedIn. Thank you very much and have a great rest of your week.
Thank you, Ryan. Have a great day.